Alright, here we're going to take a look at Reiki Healing Arts and putting in the chart of accounts. And so I'm typically going to go to my banking module and go into chart of accounts and new account. There are other ways to get into the chart of accounts, into this window that says maintain chart of accounts. Okay? Now there's three things that we have to put in for each account that we're going to create here. The account ID is the account number. Okay? The description is the name of the account, and then there's an account type. Okay, so if I look at the Reiki Healing Arts, I have the very first account is account number 101. And the name of the account title is cash, and the account type is cash. Okay? Alright, so for the account ID, I put in 101, press enter, goes down to the description, I type in cash, which is the name of the account, and then I have the account type. Now the default is already cash. So here I'm good to go. And so I click Save and New. Now I get to put in the second one. The second one is 144 Supplies. Okay, so 144, enter, Supplies. Now, the account type for supplies is not cash. Cash to an accountant means a checking account or some kind of banking account. Okay, and the supplies is not a bank account. Now in Accounting 101 we learned that there are 5 main types of accounts: assets, liabilities, owner's equity, revenues, and expenses. But Peachtree or Sage, they expand that list out. So it helps the program know exactly where on the financial statements this particular account needs to go. And so they have a little bit more expanded list than what we use in the world of regular accounting. And so here, and they've got them listed alphabetically. So accounts payable and accounts receivable each have their own type. And accumulated depreciation has its own type. Cash has its own type. Cost of sales, which is what we called cost of goods sold, back in Accounting 101, has its own type. Equity doesn't close. Equity gets closed, and equity retained earnings. Now, what we learned in Accounting 101 for owner's equity accounts was that there was a capital account and a drawing account if you had a sole proprietorship. And so, and the capital account would not get closed, but the drawing account is at the end of the month. The drawing account is going to get closed into the capital account. So the drawing account is definitely going to go into this equity gets closed. However, the capital account is not going to go into this equity doesn't close, even though that seems to make sense. A corporation has an equity account called retained earnings instead of capital. And when we close revenues and expenses into income summary, and then we close income summary into the capital account. Well, for a corporation, when they close income summary, they're going to close it into their retained earnings account. And so Peachtree/Sage is thinking that most companies that are going to use this software may be corporations. And so they use that same terminology. They're going to use the words retained earnings instead of capital. But that's what we need for our capital account. And Peachtree will not let you continue. When you set up your chart of accounts, they want an account that's a retained earnings type of account. So you have to have one. Okay, there's expenses. Fixed assets means like equipment and buildings. Okay, income is what we call revenue. When we sell services, that's income. Okay, inventory is when we have products that we're selling and they're in the inventory account. Long-term liabilities is like if we have a mortgage or a note payable that takes longer than a year to pay. Other assets, we won't use that too much. Other current assets means any current asset. A current asset is one that we're going to that's going to change to cash or be used up within a year. So supplies doesn't have its own type. Now inventory is usually sold, i.e. turns to cash within a year. Okay, but it has its own type. Okay, whereas supplies does not have its own type, and so we're going to stick that in other current assets. Okay, and then we'll say save and new. Okay, we've got prepaid insurance 145. And again, there's no special type for prepaid insurance. It is a current asset. We're going to use that insurance policy up usually within the year, and so we'll call prepaid insurance other current assets and save and new. Here we have equipment is 181. Okay. Now, equipment is a fixed asset, okay, because this is something that is going to take us more than a year to use up. If it's supplies, we're going to use them up in a few months, so that's a current asset. But equipment is something we're going to have to depreciate because it's going to take us a long time to use up. We call that a fixed asset. And we have accumulated depreciation, 185. And accumulated depreciation does have its own type. So you need to get familiar with these various types. Now once you're done, putting in all your accounts, you can go ahead and close out of this. Now on this first project, I tell you all the account numbers, all the names, and all the account types. Okay, so that you won't have to look it up. But in the future, you will have to determine the account type. And this is the source of a lot of problems if you choose the wrong type, or if you forget to put a type in. The default is cash. And then you have sales ending up on the balance sheet, and you have prepaid insurance ending up on an income statement. And stuff is everywhere because you put in the wrong type. So you need to be very careful when you put in your chart of accounts. Once you are done, you're going to want to go into reports, general ledger, chart of accounts, and that will show you your chart of accounts. Check your numbers, check the names, and check the types. If everything is okay for your entire chart of accounts, then you would hit this PDF and save this report. It's going to have to be uploaded for your first project that you need to submit to Campus Cruiser. This concludes the second YouTube on creating a company.